Yeah, so Friday, right? Pretty much there's really nothing that we could have done after that gap down in futures. You kind of see just traded up, down, up, down. This kind of action here on a Friday, if you didn't get a put up here in this 385 pre-market rejection up here, this is just going to chop your money up on a Friday. Other than this wedge breakout here, right about I'm gonna cut that wick off. So yeah, that bottom, that double bottom, 382.12 down here. The 382 touch right here because the sell volume, as you can see, it just was not there. The candles were too small. It's just kind of coming down slowly. So yeah, if you take a put, normally most people are going to take a put once you start to come down to A because once you're at huge flush underneath, but yeah, but doing flush underneath, and the volume was just not there on Friday. You can see they came in and it walked up. Then you have this this breakout of the trend line, right? Volume came in here, so you could have gotten some calls right here for a scalp, but it just wasn't worth a trade. We're in between here this morning, unless you got to put right up here market rejection, which is this line up here. All right, so you can see there's heavy resistance up here pre-market, almost a double top, triple top up here. Well, kind of a double top. A lot of resistance in here from pre-market. So always have your pre-market trading on, enable after hour and pre-market trading, and draw your lines, your resistance line here. Pre-market, they do matter here. And when you start to get in here, you can see, right? This was like the last 10 minutes or so for market close. The tops here and the projections and the pulls. This is where I take the put towards the end of the day. Small little lotto put towards the end of the day, right in that rejection, because it's like we're gonna come up market rejection again. We already had a double top of here, top, so might as well just take a cheap lotto put. And it actually went 100 and something percent. It went up to 0.70, I think, but it just wasn't worth it to trade it with any kind of size towards the end of the day. There, I mean, yeah, you could have taken probably 10 contracts and made $300 because they were like 30 cents each. But I was just like, I'll just take one, just just for those fun kind of play. You can also see if we go to the 1 hour, right? So this is SPY's 1 hour. You can see we'll draw the line so you guys can actually learn how to draw the lines. So trend lines are pretty much connecting. It's like kind of the easiest way to explain it is to connect your dots, pretty much tops in your bottom. I'll show you guys real quick. Let's delete this.
Well, is your phone connected to Wi-Fi 100? You keep
Yeah.
breaking.
Am I breaking up?
Yeah, it's choppy.
Let me take it off of Wi-Fi. Weird. Is it better now?
Oh, probably. I don't know. I don't know yet.
Okay. So SPY, this is the 1 hour chart, right? So you had this move that we had down from 380s up to the 430, right? You're always going to trade in some kind of channel going up, right? So pretty much you can kind of see how everything connects right here. This point connected with this bottom right here, right? You can see connects with these candles right here, right? And that's how you start to form your trend, right? So first touch comes up, grinds up, second touch, right? You're always going to have touches as it keeps grinding and grind higher. Just it's not going to keep, come here and then it's going to come and go up. It's going to come back and touch this trend line because that trend line is support, so it's following the trend. And every trend, right, you're going to have a bottom trend line, and you're always going to have a top trend line. That's how you get your channel. Now, what happens is that whenever you start to trade in a channel, it's going to come up and break above the channel. But this is where you start to look into your RSI and you're like, okay, we're a little bit extended here. It's going to try and go above, but it cannot go above, right? The market has to grind higher over time. You're gonna have lower highs, higher lows in between the channels, and you keep grinding. You can see, here you're at 415, right? You say, okay, we could have pushed up and go all the way up to 430. Why didn't we go to 430 here? Because you're going to be too extended off of this channel. It's going to come right back down this channel and probably break here and then break below. So you have to trade progressively higher over time by hitting the top of the channel, pulling back. And this is where you take your puts and stuff. Once you touch the top of the channel, you take your puts, right? And you start to sell them in between here, right? Because it's going to come back up and it's going to go for this channel again, right? Or it's going to come down here. If you see that it's not coming down here, you just take your profit and move on and give the market time to eventually, give it a day or two, see how the charts are setting up, and then you re-enter a different trade. Now, as you grind up, you can see, you're at 415 here, 418, right? And then you pull back, you grind up, then you have, touch of the channel, the trend line here, and then you're pushing progressively higher over time. And you're always going to touch the channel and pull right back. This is where we play puts. We take calls and you play puts and calls. This is what you have to look at. Now what happens? We got up to 431. Market kind of overshoot itself, right? We got all the way up to 431 on that run. So, pull back. And then what happens once you break this channel with some kind of volume or some kind of news, right? You can see the sell-off is going to be major. You go ahead and you can find your support lines, right? You draw your horizontal lines in here. You'll see how they kind of line up, right? So right here, you had support here from this bounce here. Just draw a horizontal line. You can see you're going to have support here. And if you look, once this support cracked, right, with this huge, sell volume here, it's going to be puts all day. Once you see this, right, that's puts, literally puts. Once that cracked and you have two nasty red candles here. Remember, this is the 1 hour, right? If you have a crack here and a 1 hour candle that closes underneath, and then another one that closes underneath, just go ahead and take puts because we're going down, right? You can see all the way down. Eventually, it's gonna, the market's gonna bounce. But if you take a look in here, what do we have here? Right. So we're just gonna break it down little by little. Right. Does anybody know what that is?
Flag.
Yeah. What kind of flag?
Bear flag.
Yep. So, you have this huge sell-off, right? Comes down and it kind of grinds up trying to, kind of trick people, right? Okay, we came down to, what's the bottom here? For people that are not experienced that, think the market sold off from, what's this? Let's say 420, right? You can start to see how your horizontal lines, they start to make sense now because you can see the levels in between. So your level from 420 down to 410, right? That $10, that level right there. And then from 410 down to 401, right? So the $10 levels in here, those would be your target. If we break 410, 401, 400 is going to be your target for your puts. Now it kind of comes down here at 410, 401 because there's support there from all, this stuff that happens here, maybe on the daily, but it grinds down. If it falls down, then it bounces back up from 401 to 408, right? A lot of people out there that don't know what they're doing, thinking, okay, we dropped from 420, went on to 401, we're back up to 408. We're probably going to go back up to 420, but they're not seeing this bear flag in between here because they don't know the pattern, right? So that pattern right there is a bear flag. And what happens? Bear flag means it's bearish, so it sells off. And, you take puts into your bear flags, and it goes all the way down to 390, right? We couldn't break 390 for a minute, and bounced off at 390. So you can see the levels are literally $10 levels from 420, 410, 400, and then 390. Then before now we get over here, this was before the CPI, right? So you kind of see this pattern starts to set up into a cup and a handle, but it's only a cup right now. You can see that U, right? That U shape, and it comes up here, and then this right here, this inflection point, that is CPI right here. So a lot of resistance, right? You draw your horizontal line, you can see a lot of resistance into this area right here. and CPI was bad. And then, once you saw this sell off here, and this was just crazy, from 414 all the way down here, it was going on to 400. We're going all the way down with that bad CPI data. So you just hold your puts, add to your position, whatever you want to do. And it was just going down all the way down to 382. And from 414 down to 382, that's how you make a lot of money, because that's a huge drop right there. 1,000%, 2,000% on those kind of moves. So those are the channels there. Now we're going to go ahead and see why one of the most important level that we broke, 398, why 398 was the most important price for SPY to have broken. Well, let's see, how do I delete all of these at once? All right, so first trend line is going to be from that peak all the way up there to right there. All right, that's going to be the first one. Second trend line is going to be from here all the way over here at 400, right? Always connect your points. You could drag it all the way across here, touch the top right there, and you'll see exactly why everything lines up. This is what I was saying. If 398 breaks, we're going all the way down. And I think someone, Dwayne, was asking me, how did I know that line was going to break at 398? Because I had this line drawn right here. So once I saw the volume came in and the level 2, which is, I'll show you guys here. It's not running right now, and I forgot to record it. Minimize. Let's see here. So
It won't show hours on there, I don't think. Not on DOS.
yeah, it's not going to show the numbers, right? But this is what we call the level 2. This is the montage, right? Level 2. This is where you see all the price action, all the buying and selling in here. And I'll try to record it so you guys can see it. And I have to well, if I'm doing live trading, I can't break it down because it's too fast. You guys have seen me try to break it down before when I did live trading. It's just too fast for beginners to really kind of understand it. You have to record. I think there's like self-recording in here. If I can record, you can actually that's a cool thing with DOS traders, that you can record your trading. It's in here somewhere. Screen recorder, right? So I can screen record and then do this maybe at a slow down of maybe times 20. Slow down so we can actually see it, and you guys can see the buying and the selling in there, and you see what you normally see is the bids starting to stack. So if you to know when you're going to go higher, the bids have to start stacking, and then the ask has to keep stacking, and they push it higher and higher. But if the bids start coming in lower and lower, and the shorts, they start to stack the ask price, but the bids are not catching up to the ask, then they're going to start to pull it. But we'll get back to the chart. That one we'll do some other time when I can actually record it. So if we take a look, right, you'll see why 398 was very, very important. So now we're going to go ahead, draw a horizontal line right here at this top right here. All right, so you can see in between here, 398. If you take a look at the daily, you'll see that 398 was very, very strong support, which is right around here, right? You had some strong support in this area right here. And shorts knew that, right? So they traded a little bit sideways. If you remember that day, after we dropped from up here, right? We traded right at 398, 399. You had that little move back, that little doji right here up to 399, right? What do we know about doji candles, right? Doji candles are indecision candles, right? So there's a lot of indecision here. What comes after the doji is going to tell you that we're going down. So a doji with a flat top red candle tells you that we're going down. That's why you saw this break below 398 and went all the way down. If you had a doji with a flat bottom green candle, then sure, we're going to go up. But there was just not conviction from buyers, right? In the market, CPI came in, so why would there be any conviction from buyers to buy this thing back up? It just didn't make sense for them to. So shorts, market sentiment at that point was like, oh, well, they can't fix inflation. So, why would I buy something that, is going to go down lower when I could get a better price? So, they just sold everything off. So that right there was 398. I will go ahead and delete again. Now we'll go to the smaller time frames. SPY. You'll see here. Let's go to the 30 minutes. So you can see Friday why we didn't go lower below 3. So just connect these little points right around here. That's all it is. Just connecting this right here. Right? You can see how the chart makes everything. It lines everything up for you. You just have to know how to draw your trend lines. So that bottom right there, it connects with that drop right here at this line. You would have already had this line drawn before this piece of the puzzle happened, right? If you were on your 30-minute and you connect this, and you drag it all the way down, your line would have been here already before this happened. That SPY is going to bounce right here. So you could have taken calls here for a quick little scalp on Friday. Now we're going to find our channel, right? So you can see where the channel is, that downtrend channel on the 30-minute, right? Right here, right? So watch when I run this line across, you'll see why they reject it, right? Because now a lot of resistance there. This is how your trading will start to make sense to you once you start drawing these lines, right? So that right there, stop doing that. Okay, and we'll run this line all the way across. So what do we know based on looking at this? SPY needs to get above what, 395 for you to be bullish again, for you to start swinging calls to the upside. If the market decides that it wants to go up higher, depending on CPI. I mean, depending on the rate hike decision Tuesday and Wednesday, we know that 395 is where we would go long, right? If it's good news over 395, we'll take calls, and then you get that gap fill back up here to 414, right to that side.
Can you put a horizontal across the top of the gap right there?
We're here.
No, at the near close from Friday.
Here.
Oh yeah, I was just trying to get reference on it. Yeah.
Yeah, I mean, you can have a horizontal here. So 388 is going to be resistance as well. And, so it's got to get above 388, then 395. You see these love the gap here, right? And then from 395 up to 401. That's why we're seeing that 401, right? Remember 401 from the 1 hour chart when we came down from 414, or at 401 is a huge resistance level of 401 going up. And once you get above 401, then it's going to become support again. Because every time you go above resistance, that resistance becomes support, and vice versa. If you go underneath it, then the resistance, that if you go under support, then that going back up, that support is resistance. We'll take a look at the daily chart now. So daily chart, right? So you see what happens when you chart on your 1 hour time frame and everything, it comes on your daily chart as well, right? You can see how everything lines up. Resistance. You see how the candles touch on the daily, right? The peaks of the candles touch when you draw your lines, and right here to right here. So now you can go ahead and just leave your chart, right? And you're like, well, what does SPY needs to do, right? It needs to get over 395 for you to go long, and under 382, you need to go short. If we go under 382, you go short, you take some puts. So we'll draw a horizontal at 382 and see if we have any kind of support at 382 from the past. Now, if you go over here, what do you have here? 382, that line, right? You can see why it bounced right here, right? Lines up with a candle that you have here that touched right here as well. right here as well. So 382 is significant all the way across the board, right? So let's see. The only thing with Dash Trader is that it's really hard to scroll all the way to the left. I don't know. It's like the chart. I have to, let's see. Maybe do 200. Let's see.
If you minimize it, it's got a scroll bar on the bottom.
Yeah, but it only scrolls so far. Okay, there we go. Actually, hold on. Configure margin. But it doesn't have an X axis margin. That's the only thing. It only has a Y that I see in here because the Y pushes the screen to the left. It gives me more space over here. I want more space. I want this pushing back to over here. Whatever. It's okay. So you can see 382, right? Significant level for SPY all across the board. And then we have, we had this low here, right? And you can see when we cracked that low, this trend line here was really, really important trend line, right there. You can see a lot of resistance, and in between there, right? Once you start connecting everything, it will make sense, because if you look at this line now, and then this line here, what do you have in here? You see your triangle, right? With this line and this line here, you just could not get above, right? You couldn't get out of this peak right here. Strong resistance there, 396. You guys remember 396? If you go in your smaller time frames, say your 5 minute, right, and go back a couple days, you'll see why 396. Look at that. That is 396 right there. They pinned it literally at 396, and it could not break above 396 all day. And then if you go to the daily, it makes sense because you're in this triangle right here. Then you can't break above, so you're gonna come down. It's the same thing that happens everywhere else where you cannot break above and you start to sell off. So if we break 382, we have to find where we're gonna go next, potentially, right? 382, this is likely where we're gonna go. Some down here at the 372, strong support at 372, and then eventually 370. And if we go down here, right, so you see, so we'll draw a line here at 372. There's support at 372.70 in between that area. And then after that, you have that little bottom there at 371 on the trend line. If that breaks, right, you can see how that low of 363, I believe it was 363, right? You can see how we're gonna get down to that price right there. So we break below 382, we'll target puts down to 372. And that is why I did the 930 expirations, right? Because if we sell off by the end of the month, depending on the Fed, the rate hike, I don't think they have a choice at this point anyways, unless there's some kind of influence, maybe the economists are saying, if they don't ease up, they're going to crush the economy. So just have to be real. Midterms are coming up. They could be under pressure. That's what they're saying. Biden has to kind of tell them like, hey, you got to ease up off of the rate hikes because you're going to crush the economy. So, but the Federal Reserve is a private entity. It's like there's no political influence in it. That's what they say. Like they don't go by what the Congress or the White House says or some shit like that. They're private. So we'll see. We can't tell what they're gonna do next week. We just have to see after the fact. But if they continue to raise rates, then we're gonna likely go down to 362. You have just trend lines everywhere right here. Just going forward, right? All these lines are going to play a huge part going forward. So right around here, you just connect that right there. So if we start breaking, we come down, right? We say we come down to 360s and down to 340s, and then eventually a fixed inflation. This line that drags all the way down is going to become important. So there's going to be a downtrend line eventually I can't go all the way down on the chart, but you see you go down and then you eventually start to curl back up, and then this line becomes important, and then this line with that line over there starts to give you your downtrend channel over time. But the chart would have to play out that way, and then we'll um, see what happens, right? So kind of like that. If we go down, that is. We could take a look at, let's take a look here. If the one thing is that if you're trading with a 1 minute chart, you'll start to see like the bear flags and stuff a little bit earlier than the other time frame. So you know you can start, because you take a look in here, right? Even though the market looks like, you know, this is Friday, it's pushing up right in here. There's a little bear flag right there, right? You know, you can start taking puts up here, then it cracks here and it goes down. But some people look at it and you know it's a channel, right? Trend that's trending up, but ultimately it's not a bullish kind of channel, right? It's just after a little sell off, you have a little grind up into a channel, and then you know this whole action here is just there's just no real buying, nothing pretty much. So we couldn't really trade this on Friday, because it's just if you play Friday expiration, time decay is just going to eat your contracts alive. We can take a look at like other stocks across the board as well. Tesla, the same thing. You had a pretty much no range in between this. I know some people are looking at Tesla. Just get Tesla. Pretty much that right there. 297, 299. You're gonna give your money away all day on trade out here. 9. Let's go back here. You're gonna have to be averaging down or cut. Let's go away from you know. Good.
You're breaking up a little bit.
I'm breaking up.
Yeah.
Crap, I don't know what's going on with my signal. Let's go back on Wi-Fi.
You're good now.
I'm good now.
Yeah, you're good now. Just for like about 10 seconds before that, you were just in and out, mostly out.
Okay, my bad. I think probably because I had the phone on my stomach. The speaker was blocked off, I think.
You're good
Yes,
now.
All right, cool. So, you know, Tesla is everything's going to trade into, you know, a triangle or some kind of pattern, and it just was not worth it to watch anything on Friday. Pretty much, as you can see, I waited literally till after 12 o'clock to take the lotto play on SPY, because it was just no opportunities there, right? Sometimes trading is going to be like that, where you have to kind of just sit back and relax, and like, you know, it's just not worth it. Like, it's just a headache. You're just sitting there for 6 hours, and you're just seeing just a chop zigzag kind of thing all day. And if you don't go in, you're not going to lose any money, right? Then, you know, you wait for next week and you find better opportunities. You know, so Tesla, it was not worth trading. For I mean, some people are looking at it, but the only way you would have gotten a great move is if you got in right here at 299, right towards the end of the day. So this was the last hour pretty much. All right. And then you have that rip here from 299 up to 302. That would have been a great place. You probably get 50, 60, 70% on a lotto play Tesla like that. But in between here, market open to here, and no, it wasn't worth it. Same thing with SPY. Everything is across the board as well. Amazon, you know, you can see the range on Amazon is the same thing. It's literally $1, 121.61 up to 122.94. You're just gonna get chopped up. So Tesla, Amazon, what other stock? Those two pretty much time decay on them. It's really, really strong. It moves really fast. Same thing, if you get a move on Amazon from 120, 161 up to 123, it's an easy 100% right there. But if you get on the wrong side of it or in between it, and it starts to chop on you like this, right? If you like say you get in right around this area right here in the middle, you're going to lose money all day if you get in here. This little move up to here, you probably get 15% or something like that, but is it really worth it? Probably not. Unless you're scalping all day, and you just get a 15% here, and you're perfect at getting in the top of the channel, and selling here, and then taking a put here, and then going in and out. But other than that, this is not really worth it. We'll go back on SPY. So we will take a look at SPY. The weekly on SPY here.
Even Apple.
Yeah, we can take a look at the big dog. Apple. Ooh. So, Apple, same thing, right? Let's look at that chop all the way until towards the end of the day. The reason why, and I kind of was like, okay, Friday, they're likely not going to do anything until Monday, because first of all, you had we'll take a look here. So let's take a look at Apple. So Apple 150, take a look at the daily. You see why that 150 level is important, right? 150, you have support around there at 150. So if it breaks 150, you see, you should take a look here. You have this double bottom kind of right here. So 150, you have that support right here, right? Bouncing at 150. If we close below 150, you can come all the way down. The next target is going to be right around here, 140, 142. And then after that, you have that 52-week low down here at 129. If this breaks, then this breaks. That's going to be based on the rate hike decision. They're going to wait for that. If you take a look at Microsoft as well, it was literally hanging from a cliff. And then you had that little push towards the end of the day on Friday that kind of took it out of that area. Because if you take a look, 240, what was the bottom here on Friday? 242, right? And this was just terrible range all day. And then you have a move up to 245, right? So it's about, take a look at the daily. So we can see right there why that area is really important, because that low is 242. And if we break below that, right, this is Microsoft's daily chart. What do you see, right? If we break that 242 right there, there's nothing below it, right? So this thing is going to slam all the way down. So, they're waiting on the rate hike decision to make that move on. NVIDIA, same thing. Everything has kind of a head and shoulder and looking like it's going to fall off a cliff in that area right here, right? Well, Facebook.
It would be nice to look at FedEx.
Oh, FedEx. We could take a look at FedEx. Oh my God, man. Can you imagine getting 275,000% on a play? Those contracts. But I mean, I don't think anybody bought those contracts because, for one, they were very far out of money, because this was, and it was not an earnings announcement. It was just, he came on the news and he said, earnings for FedEx is on the 22nd. So he gave like a preview of the earnings, right? So likely people were not in puts that were just cheap. They're probably in higher price puts that were like 180 or somewhere up here. It still made a lot of money, but like the ones that went 275,000% were like the 160 they were cheap. They were like 0.01. Chances of people buying those ones are very, very not likely, because they're literally selling for nothing, and they go, it goes from 0.01 to $31. So you get 275,000%. So that's just insane. If you had $1,000 in that, if you're like, oh man, I think FedEx, if you're doing research on the company, you're like, I think FedEx is going to do horrible for earnings. I'm just going to put $1,000 into a lotto put that, costs 0.01, and it drops down here, and you make 275,000. Then, Jesus came and touched you that night before you bought that put or whatever, whenever you bought it. But I mean, there's really nothing much to say, Ozzy, because this thing just got slammed. This
All
has
by
got
surprise too, right?
what was that?
All by surprise too. But for
Yeah.
some reason, while Bill had it figured out,
Yeah, he did. That was crazy.
he had it figured out. That's what I say. His timing as far as when he's looking at far out calls, I think he's the best one to consult because he's like pretty much far out plays. He's kind of on point with those. But I would have never seen this coming, man. Unless like I'm playing the earnings.
Mhm.
And
Yeah, and
the
that's what.
earnings, yeah.
Yeah, most people are probably going to wait till this week to get inputs because earnings coming on the 22nd, right? And then
It's too late now, though.
too late because if he says whatever he's going to say at the earnings, it's already been said. So
Yeah.
who knows if it's going to go lower? I don't know if it is going to go lower, but if it breaks, let's see what support levels. Well, you can see why it fell all the way down because FedEx for the past couple years, right? The stock it's been a good stock for people to invest in. For long-term investors, because one, it gives a dividend, and you can see it trades up in this $200 area for a very long time. So once it broke, that support area because of the news, right? You can see once it broke, that 193 or even this area right here, you can see a lot of bottom support here in this area, right? You see this area right here is a lot of support right here, and then right here, but when you have a candle that looks like this and it breaks all levels, right? You kind of see it just open the floodgates. And if people were in puts and they were in cheap puts that cost 0.01 cent, then they walked away smiling. But even the people that were in 180 puts, 170 puts, whatever puts they were in next week, they it came early for them and they walked away with a ton of money. So you can see as soon as it opened. So another thing as well, right? If you're looking at FedEx, right, and you see something like this that happens overnight, right, and it drops when market opens, right? This is market open right here. Go ahead and buy a put as soon as market opens because it's gonna go down even more, right? So you had a drop here from 161 all the way down to 155. Take a put as soon as it opens and close your put. That's a good 200% right there on a Friday, right? It's always going to sell off like that. People are going to panic because it already sold off so much. It's going to sell off some more. And then you kind of look for.
What time frame are you on there?
This is the 5 minute.
So that's in 15 minutes you made that money. Yeah.
Yeah, because look at that drop at market open, right? All the way from 161 or down to 155. That's a $5 drop right as soon as market open on a Friday. You take a lotto, easy 200%. And then you had some buying again, and guess what? If you're looking at your chart, if you're interested in FedEx, you had some buyers that came in, they bought it back up. But as soon as it came back up, it came right back up into resistance, right, and it sold right back off down to the selling on this is going to be crazy. So back up to 161, then it sells off again, right back down to 157. $4 drop. In literally the first hour of the market, you could trade this thing up and down and just walk away with crazy money in the first first half an hour. So that was FedEx. So we can take a look at Adobe as well. All these companies are they're guiding lower. Earnings is just terrible. Adobe, just look at that, from 370 all the way down to about 300 before market open, pretty much. down to 305. So a $70 drop. Puts went crazy on this as well. And the day before Adobe had earnings, my brother and I were talking about it, and we're looking at puts, but the puts were expensive on it because I was looking at like the 350, the 360, 340s, and they were like $600 each. So I was like, it's not worth it to play it. And we were saying, the 300 puts, 320, they're like cheap, but we're like, it's not going to go down there. So you're probably going to get crushed with IV. But look what happened. It went from 370 all the way down to 290. So sometimes you just gotta take that leap and just buy a put. Like, okay, I don't know what the current environment. If anything is bad with earnings, the stock could sell off 100 points, depending on how expensive the stock is. 50 points, and people just walked away with a lot of money on this one as well. So then it starts to trade in a range now, and there's really nothing much going on. So ultimately, I think it was I had a good week. Just gotta wait until next week. So I'll probably hedge for CPI next week. I mean, there's really no point in kind of guessing where we're gonna go other than to just hedge it right. So if we take a look. Here. Try to find the options chain in here. Probably not gonna load. Okay, no, I loaded. So this is option chain for SPY. So we know that the 21st and the 22nd, I mean the 20th and the 21st is when CPI is gonna come out. So if we take a look at let's see what puts we can actually play, what kind of hedge we can play. Just puts for now. So end of month, we know that we could play a 360 put. You think it's far away because we're at 387. That's what I was saying to you guys. It was Wednesday and Thursday. I was like, we could still go down to 380, right? Because when the market starts to sell off, and as you've seen with SPY, we could be at 395 and you can expire 1 or 2 days out with a 380 and you think it's not going to go down. And, it takes literally 1 day for this thing to drop $10 and then a couple more dollars and you're already in the money. The selling on it is just, it's like crazy. It's just the environment that the market is in. So if we take a look at 360 put expiring on the 30th. So let's see how much they cost. So we could do a hedge, maybe these cost
26 September 379s are only like 350.
$250.
Yeah, for 26 379s. Not bad for what it is.
Yeah. The only thing is that if you do a call with it, it's gonna cost about $700 total. So the only thing is that if we move sideways, you'll get crushed on the 26th. So the best way is to probably do something out of money that's cheap. So if we take a look at the options, 360 that expires on 9/30 is $1.24. So it costs $124 for one. Now if we take a look at let's take a look at 400 call. So September 30. Let's see if we could find a call. So that's about 360 is about $27 out of the money. But you look at it and you say, well, $27 out of the money by the 30th, it's far away. But if the rate hike comes in, the market's literally, they raise 100 basis points, we're going right down to that 360. Right? If they say, hey, we're going to ease up, then the market's going to bounce right back over 400. It literally will bounce back over 400. So if we take a look at maybe a 405 call, because those are probably squashed right now. So, yep. So we could do a 360 put on the 30th, right? Costs $124. Or we could do it with a 405 call that costs $114. So in all, you're risking about $230 on a hedge, which is not a lot, right? Considering it, because if we move, we could take a look here to hold on here. So if we take a look at the options profit calculator or options strat, whichever one you use, we take a long put, SPY. That's right. So we'll take if you guys don't know how to use this, I'm doing it right now so you actually see how to use it. So options, you put in a put, right? You go in, you select your option, strike price. You can use options strat as well, right? September 30th, you find your strike price. Let's say we're doing a 360 put. You can see here, it shows you how much it cost, right? $123, $1.22. You can put how many contracts you have if you've bought them already, right? Now you go ahead, I agree, calculate. So let's just say we bought one. So you can see if SPY goes down, we have the 21st and the 20th and the 21st for the rate hike decision, right? So we're gonna buy them on Monday, which is the 19th. So this is gonna change a little bit because it's calculating for the 18th and the 17th, right? So you can see this is a little off. That's the only thing. So, but look, if we start to sell off by the 30th, let's say the 22nd is when they're going to make the decision on the 22nd, right? You can see we need to get down to 377, but it's going to change on Monday because it's accounting for 2 days, 2 extra days. So 370, you start to sell off down to 370 on the 22nd, and then if you get to 370 on the 22nd, you're already up 116% on your put, right? And you're probably losing 100% already from your call, right? And you're like, well, I'm not making that much, but look what happens now if we get on the 23rd, you start go down in the 360s because it's going to go down there, right? Based on the rate hike decision, then you start to go down. You see how that put starts to increase now 214%, and then you go down by the end of the week, maybe even before then, you start to go down to this 360 area. You start getting 389% from one side, 300%, whatever it is, 240% still good from one side because you made 140% gain overall, right? Just like the hedge that we did, everybody should have walked away with profit, right? So it's a cheap risk. It's only $230, but at least you're protected on both sides unless we stay flat. The only way you lose that $230 is if the market stays flat, literally. No, we take a look. Yeah, go ahead.
Hey, quick question. So how could we use like the IV and positioning of the options to determine like what the potential move could be based on the news?
Okay, so that one I have to go in Webull. Let's see here. I'm not sure how I'm going to be able to share my screen in Webull. Let's see if I can find it in Illustrator. So let's see. So the way how you find that is just like with earnings play. There's always going to be an implied move based on how many puts and how many calls are bought. And you calculate it and then you divide it and you get an implied move. But I'm not seeing it here in DOS Trader. 'cause I haven't actually bought any options here in DOS as yet because this is really, really complicated option chain. I'd have to get in Webull, but I'd have to close the screen and then reshare it, I think.
Yeah, no
Reach.
worries, no worries. Not urgent for today. It's just, you
Yeah.
know, thinking about like the hedge next week and the potential
Right,
move to plan for.
all right. Let's see here. DOS, yeah, DOS, I'm not sure because I just literally just got this broker, so it's kind of hard to figure out how to manage everything in here. Let's see.
Looking for in DOS. Like, what are you trying to find in?
Trying to find, so hold on one second. So it's I can't find it in here, it's fine. We'll just do it on Webull another time. So we'll go back to the calculator. So this one here.
Some
The,
people pull up Weibo probably could help you out there.
yeah, but I have to share the screen. We'll go over that one another time.
Okay.
Yeah. So we have the put, right? So you selected a put. Now we'll go to the call side, right? So you just go in here and the calls are going to be on the left. It tells you right here calls, right? And it tells you option prices are delayed 15 minutes in here. That's because you don't pay for a subscription or anything, so you have to wait for this to update sometimes. So we go to the 405 calls. Their cost $112.
Hey, I'm sorry, are you sharing a different screen maybe? We're seeing the DOS view, not the profit calculator that you're looking at.
Oh, crap. You guys are not seeing that. That's true. Let's see how I could. Normally it would. Oh, okay, hold on. Let's see if I could. How do you share a new screen in Zoom? If anybody knows, we did it one time where we figured it out. How to share a new screen, and it just transfers over to that screen.
Yeah, you may have to stop sharing your screen and then start again and select when it gives you the option to select multiple screens.
Right. Let's see. New share. Okay. Yeah, you're right. So there we go. Can you guys see it now?
No, still seeing the center point screen.
There it
Oh,
is.
now we're seeing it. Yep.
Seeing it now?
You're live.
Okay. All right. Yeah. All right. So here we go. So now we're going to take a look at, I'll do the puts after this because you guys weren't seeing. So now we're going to do the calls, right? So if we do 405 calls, which is about $20 out of money. So we could pay $20 out of money. Now we're going to go ahead and move this up to 410. Because if we go up, we're going to go up to 410 if they decide not to do hikes. If they're like, well, we're going to crush the economy, we're going to slow it down, then the market's going to go back up. It really will go back up. So you can see it's going to cost $112 for one contract. And you can see if the market starts to get over 390, right, just like 380, if we start to go below 380, then our puts start to print. If we get over 390, the calls will start to print. So, if by the 30th, if we start to get up, well, it's going to move up the very first day of the rate hike, which would be probably the 22nd. And as we've seen, the market's going to go up maybe $10 or more, depending on the decision that they make. It's just how volatile the market is right now. So we could potentially get a $10 move on the day of the rate hike. So we're at 387. We could come all the way up to, 398, pushing up towards 400 on that given day, which is the 22nd. And you're going to make 191% from your call side, and you're going to lose that 100% from the put. But overall, you're up 91%. Instead of trying to guess which way the market's going to go that day, and you buy a put because you're bearish, all right, and then you get crushed because it goes up. And if you buy a call because you're bullish and you think the Feds are going to stop, and eventually the market goes down. So it is better to do a hedge that's going to cost us about $230 if you buy one contract each, that is. So that is the best option. Or we can wait till the day after everything has passed to get into a trade. But by then, the move is going to be likely finished. You know, the move is going to be done. The huge move is going to be done and we'll miss out. Just like if we had waited on the last time we hedged, right? If we didn't hedge and we waited for the move after, then yeah, we could have gotten some puts in the market open. But, you know, at that point, the kind of move is kind of already done. And, you know, we're already in our position. So it was better to get in the move before. And now you can see, you know, if on the 23rd, we start to push over 400, right? And go up to the, you know, 403, 404, you can start to get 311% from the call side, right? But you lose 100% from the put. So overall, it's going to be a win, you know. Yeah, so, you know, I think the best option to do is for us to do a hedge. And then we'll check the put side right now. Give me 1 second. Let me turn this TV off.
This animal
Can you
has.
turn it off?
Got a question for you?
Yeah, go ahead, sir.
What happens, where would we be if it only goes like halfway? Instead of 400, it goes up to 395 or something like that.
Hold on, say that again. I was talking to my wife. Say that again.
I'm sorry. What happens if we only go like halfway up?
Well, let's say we go to 395, right?
Yeah.
On the 22nd. You're gonna make
Still in profits, right?
395, you're going to be up 80% on one side, and you're probably going to be losing about the same on the other, or 100%. But, you know, if it goes up to 395, you don't expire till the 30th. If the market pushes higher, the next day, chances are it's going to go for 400 because, you know, they put out good stuff, right? So you still have the 23rd for us to push up towards 400. And you can see up there, you're going to make 163%, give or take. This is with zero IV. So let's say I push up the IV to, they're usually around SPY, they're around about 20%, right? So you can see the IV, right? If on the 22nd or the 23rd, you start to push up there, you're going to make about 170%.
Okay, and what about if you see the market is going higher, then it would be making sense to just close the put side, huh?
Yeah, just close the put side. Yeah, just like we did with the last hedge, right? You
Yeah.
just close the put, right? Close the call side, and you know you just hold on to your put, and you know just went all the way down, right? Like for people that could take 2 contracts or 3 contracts of each side, right? If it's going, you know what, whatever side is going, right? You're making more money on it, like the ones that we did on the hedge, right? You know, if you had 2 contracts each, you close the call side, right? So one of your put for, you know, the profit in the morning that we were up, leave one to run all the way to the expiration date, right? And you know, that day, that's what I was trying to tell everybody, we're going down, we're going below 400. That morning when we popped back up to 403 was just shorts covering their position, because why would they not? You just dropped from 414 to 402. That's a $10 move right there on shorts that had thousands of shares short. Why would they not cover their positions and take a $10 per share profit, right? So you're always going to see that shorts are going to cover exactly as the market opened. You're going to get an early morning spike on SPY as $1 or $2, but it's going to come right back down as soon as, you know, they reposition and more shorts come in and take short positions, and they start to create the walls and all this other stuff, and you're going to slam down. That's how you see we came down to 398. And if you remember, we traded at 398 for a long time. You had that little fake push up to 399, right? And then after that, what happened? We went all the way down to 391 or something like that, right? Within the last hour or so, you dropped about $8. So, you know, you may see it at like 398, 399, and only have an hour to go. And you're like, well, you know, SPY's not gonna, you know, it's not gonna drop anymore. But no, when that selling pressure starts and they decide, hey, we're gonna clear the books, because I would do the same thing if I, you know, had millions of dollars sitting on the table, right? And I know the market's bearish, why would Wall Street, why would they hold their positions? And another thing is what they call the quant, I don't remember, quant something.
Quadruple watching.
Yeah, no, so you have this algorithm called the quant, which is QUANT. Yeah, so it's what big Wall Street, the hedge funds use, like Citadels and all those. What the algorithm does is that it mimics humans' emotions, and that's how they get you out of your position. That's why those guys are always making money, because the algorithm they have, it knows exactly what human emotions are going to be doing when something like this happens. And that's how, they end up holding their positions and they make billions of dollars while you're selling for a loss because you're too emotional. And that's what their algorithm, it mimics human emotions, so they know exactly what's going to happen. So that's the call side. Now we can check the put side, right? So it's going to be a $230 risk, and it doesn't mean you're going to lose that $230 if we do the hedge before the meeting, right? If we stay flat, you're probably going to lose half of it overall if we stay flat. Just remember that you're not going to lose it right away because you're not going to get IV crushed. It's not like an earnings play where you're going to get IV crushed. It just doesn't happen like that. So we take a look at the puts. 930. So we can take a look at you could probably go a little bit higher. No, 360 puts good. 360 is $122 for one. We put up the IV. It's about 20%. Normally the IV is about 20% on SPY. So you can see now on the 22nd, because we know the 22nd they're gonna make that decision on first, right? So the 22nd, you need to go under 380 for the puts to print. You need to go above 390 for the calls to print, right? But if on the 22nd that decision comes in, they're like, we're gonna raise 100 basis points, we're gonna drop like $15 that day, literally $15, and we're at 387. 372 is gonna happen that day, right? Next, you can see 370 is likely gonna happen, right? You're gonna be up 160% on one side, and you sell your calls, and you still have the 23rd, which is the day after that. You have futures as well. That's going to bring the market down even more, right? Now we're down to 370s, and then you have the 23rd for it to sell off again. You're starting to start coming down at 360s, and you can see huge difference, right? 270% now, then 300%. Then, you go down to those lows, you still expire under 30th. So you have time. And either way you look, it's like around, you won't be at a loss much. There's no way you'll be at a loss if we start to sell off or go up, because it's not going to take, they're not going to hold it till the 30th to sell it off, because as soon as that news comes in, it's going to dump whatever Jerome Powell says. It's going to react to it. We've seen it in the past before, and it happens every single time. It's going to make a huge, regardless what he says.
So you ever
Hey,
notice?
do you know how to plot this, both the put and the call at the same time? I think if you go up to the top and use the straddle option, it'll let you put both of them. So under advanced, yeah, I think it's straddle. Yeah, either straddle or strangle should work. It'll let you enter both of them at the same time.
Let's see.
And that way you can really visualize like the actual profitability. Yeah, so if you put both of them in, the chart paints a much better picture of like what could happen.
That's awesome, man. Thank you for that. I didn't even realize that.
Yeah, no problem. I use this all the time whenever I'm pricing out options.
Oh my God, thank you. All right, yep. So we'll do this right now. This makes it a lot easier. Profile call.
What platform are you using there?
Options profit calculator.
Okay, that's a free one.
Mm-hmm.
Yeah, it is. Yeah.
Okay, I gotta download that on my machine.
Yeah, and you can change the price range. So if you want to look at like top of the range going up to 410, you can change it right at the bottom there of the chart.
Okay, 1 second. Oh yeah, you're right. So okay, the top right here. I always give my son a shower. He doesn't want a shower, man. 10. Okay. Yep, there we go. So that gives it, yeah, makes it a lot easier. You know, change the IV to it's about 20, about 20%. No, right. All right. So yeah, there we go. So if we start to get above 390, you know, you can see on the 22nd, right? We have to get up to about on the 23rd. We just need a 23rd. You get up to about
Yeah. And one thing with this view, the percent gain or loss that you see is net of the other side of the transaction. So that 135% is net of the put basically losing everything.
right, pretty yeah,
So that's
exactly.
a true 78% that you just hovered over.
Right. Yep. Exactly. So yeah, you know, if it works out, you know, it's gonna work out well. I think it's better than to guess which side we're gonna go, right? Because we just don't know what Rome is gonna say. So, you know, if it's bullish, if it says something bullish, we're gonna go back up to 400 and then up to 410, you know, somewhere up there, right? We just need to go up to 400 pretty much. All right.
But I've noticed too, but when it comes to these announcement FOMCs, um, even prior to the meeting, let's say 5-10 minutes before the meeting,
mhm.
the market kind of moves in the direction that it's going to go. It takes off in that direction even before Powell speaks, like somebody, you know, like people who know something. So they,
Yeah.
yeah, you can see the plays starting to happen prior, just, you know, when you're looking at it, you know.
Yeah, that's the thing. We just, you know, we just gotta wait. I mean, well, you know, it depends on what you guys want to do. Wait until after the meeting to make our decision, or you know, we could wait. We could do it before. So it's what everybody's comfortable with. Where we can wait, or we could do it before. Because if it's bearish, right, the next day the market is gonna sell off. It's literally gonna sell off. You know, we could take a put the next day, maybe on the early morning spike, and you know, if it's bullish, it's gonna go up. So we can wait as well. That's safe to wait until the 22nd. Or we could take a play on the actually we don't have to do it on Monday. We could probably do it on Tuesday because I don't think anything's gonna happen on Monday. That's the thing. And then Tuesday, I think he speaks was it at 2 o'clock? Let's see. We just Google it.
I just Googled it. It said the meeting is at 21 or 22, right? I don't know if you can hear me.
I can hear you, Ozzy.
Yeah, but they said it was
And his
20.
phone died. Watch this. Watch, I'm gonna try to call him, and I better go straight to voicemail.
Hi, you've reached your
Guys-
voicemail box with Andre Falconer.
Straight to voicemail. Your phone died, Andre.
Sorry. Gotta plug it.
Watch, you'll see the mouse stop moving, and then it'll just realize what happened.
It's a good thing it's not a trading day. That would have been 45 minutes early.
There you go, phone died. Yeah.
Oh man. I just Googled it and it said the meeting was on the 21, 22, but the timing, I'm not sure. Maybe I'll have to go. I could really check into it, but I don't want to drop the call to go and look, right?
Bro,
Yeah, it's usually on the second day. So whatever the second day is usually.
Yeah, but I don't know. So what do you guys think the market will do? Drop or float? 'Cause every time- I don't know.
I mean-
but I noticed that every time it goes up, it's like even on earnings, right? Earnings plays. You see it's going up. When it's earnings, boom, it dropped down. And vice versa. You know, it starts going down like before earnings and when earnings, boom, pops up.
Yeah, I think technically the market's looking like down, but I've listened to all the Fed speeches so far, and even when the analysts are saying, oh, they're going to go 75 or 100, I don't know that I necessarily believe that. I mean, he's never said like points to 50 to 75. I'd be surprised if they go 100 just because of the last inflation report, which really wasn't that bad. Like, if you bring down housing, then you bring down the US economy, and that's bad for everybody. I don't think that's what they want to do. But housing is the last big bit of inflation that's really still high.
Well, that's the last to drop in every time, right? Housing is the last thing to come down.
Yep,
And when that comes down, then it's over. Right? When I
exactly.
say, yeah, then it's the inflation numbers get, but they want it down to like 2%. It's at like 8 right now, right? So that's still 6 points away.
Yeah, but it's 8% if you're comparing year over year. But if you're actually just comparing 2023 inflation, it's nowhere near that high. So once you get that year over year rolling off, because they're tracking like a rolling inflation average, it's not a pure average that they're sharing. So if you look at inflation from January this year to now, I haven't looked at it, but it's not 8%. It's way lower than that.
What would be the true figure then?
I don't know. I'm gonna say it's probably somewhere between like 2.5% to maybe 4%, because you're looking at just increases that have happened this year. I mean, house prices stopped going up in what, June or July? Most of the
Okay.
increases happened, most of the increases in all the prices of stuff happened last year, late last year. So that's what we're seeing. If you track it on a rolling average, it's 9%. But if you just look, like for example, last month when Joe Biden said there was no inflation, I mean, there really was no inflation during the month. prices did not increase at all. And the month before that, inflation was actually like 0.1%.
So they're
So
looking
I'm
at
not
two
tracking
different-
what that number is, but it's not 8%.
So they're reading two different reports, basically.
Yeah, what they're looking at doesn't reflect like actual inflation. It just reflects like a rolling average. So they're including October, November, and December from last year in their number.
Okay. So rolling averages. All right. But which one? Okay, so who has the most effect on the market? What? Not what Biden says. It's what the FOMC says, right?
Oh yeah.
So we got to play what they say.
Mhm.
So if they're saying it's 8% and they want it down to 2%, and they're using the year over year, I'm saying we have a long way to go.
I don't necessarily think so, because I think like once those months roll off, those higher months of like October, November, December, January, like I don't think we have that far to go. The reports,
Okay, so you
it's a
just
matter
called
of how
3
they
months right there.
calculate stuff. And
Those
you
3
know.
high months you just called. Let's roll forward 3 months then before it can actually reflect, right? Is that what
Yeah.
you're saying?
Mhm.
So 3 months down the line, we're in September, let's say October. We're in October now. You're looking at January next year.
Yep.
Hmm. I don't know. I guess I don't. So I just play for what I see, man. I stop
Give me
trying.
1 second. I'll be back on. Just a sec.
Okay.
Yeah.
Plug your phone in finally, eh?
Yeah, I did.
Yeah. So just play for what you see, I say. That's it.
All right, I'm back, guys. Let's see here. Yeah, so I was saying before my battery died that just keep charting, keep join the lessons with Evan, and chart ultimately the only way to really kind of figure out what they're doing or how they're trying to push it. Personally, for me, it's all about trend lines. I know a lot of people out there use a bunch of different stuff, whatever people use to make money, I guess. Whatever makes you money and it works for you, then you can use it. But for me, it's just pretty much trend line. 500 years ago, a couple hundred years ago, maybe 200 years ago, I don't know. Whenever stock market was around, right? You didn't have anything like flows or anything like that. It was always trend lines, right? So that's why I personally just use trend lines pretty much. Pretty much all trend lines. That's trend lines and the level 2. The level 2 is a montage, same thing, a lot of different names for it. That gives me an idea of what's going to happen with the market. And that's how I take all my trades. All right, so cleaner chart right there.
So
SPY.
you see that with conjunction with volume, RSI, MACD? would be
Yeah,
kind of
volume is everything. Volume is everything in the market. Without volume,
nothing.
you cannot do anything, right? When I'm in a short position on a stock doesn't have a lot of volume, I can't get out of my position because there's no buyers. I mean, I get out of it eventually, right? But there's not a lot of volume, and when you have too many shares, you can actually pop the stock all the way back up because you start to cover, and those shares are buying. You're buying your shares back when you're short, so it comes in as a buy order, right? So, um,
Do you have a
Vol-
lesson on montage and how you use that? Is there someone safe I can watch?
yeah. So the montage, it's lightning quick. So I have to record it live, and
Okay.
then I'll do a Zoom where we actually have to share that video. So it's gonna be, how would we do it? So I'm gonna have to share. I'm gonna have to play it on my screen, then share it. Okay, yeah, we'll figure it out. And then I'll have to slow it down, maybe at a, you know, maybe at times 20, um, slow down, or maybe times 10 or something like that, and then kind of break it down because it's really fast, especially with SPY, because it's just a lot of volume in SPY every single day, a lot of money coming, in and out. It's lightning quick. It's a lot slower on like penny stocks and stuff like that, but SPY is it's ridiculous. So that one,
Or maybe if you can demonstrate on a slower moving stock, like what we'll be looking for with a slower moving stock, you can. So then by the time you go over to SPY and slow it down, we might be like still be able to follow.
yeah, I could do a penny stock that has like slower volume or something that's top gainer in the morning. I could do that and I could show you guys.
Yeah, something like that. And then before you move over to SPY, because SPY, I know that I don't even put it on because it blinds me. It moves so fast, man.
Yeah, it's fast. I think you guys have watched me use it before in the morning. I remember you. I don't know if you guys. Some of you guys probably did. Yeah, but that thing is it's quick, man. It tells you everything. That's the price action. You see the buyers, the sellers, the bids, the ask. You can see where they're stacking it, where they're bid. It's pretty much they start to buy below the bid. They start to stack it below. They see the ask price start to come down. Then we're gonna go down. But when they start to stack the bid, you get bid support. The bid keeps pushing higher and higher, then the ask keeps moving up. Then that's when you're gonna start to go up. You'll see it. It takes time to get used to it, but you'll see it. Once you see it start to stack up, that means there's bid support, then you're gonna go up. And if
So
there's not support, then they're gonna hold it.
basically looking at the bids and the puts column.
The bid and the ask.
Sorry, yeah.
Yeah. So you're looking at the bid and the ask side, and then you start to see big buyers come in, big shares. So let's say the bid is at let's say we're at 400, right? And the ask is at 400, the bid is at 399, right? You want to see the bid push up to 400, then the ask push up to 401, and then the bid support keeps pushing up, and then the ask keeps moving up. But if you're at 400 and then you see the bid drop to 398, the ask comes out to 399, and they start to stack 399. Like you see a long wall of 399, right? But then the bid starts dropping low, we're gonna go down because it's just not enough buyers on the bid side to keep holding the bid support. And then you see a big buyer at like say 390, let's say 399. Let's say we're at 400 and the bid is at 399.99, right? And then when you look, you see a big buyer at 399.90, like say 20,000 shares. And when you look at 399.99, it's only 100 shares. It's gonna go down to 399.90 because there's a big buyer right there. So the system is designed to come down and pick up that big buyer, but 9 times out of 10, it could just be a short order sitting there to cover at 399.90. So when it comes down to pick that order up, they move the order. the order doesn't get filled. They move it, and then now you're at 399.90. So they're tricking the system. And then they push it down to 399.85. And then it comes down and they pull it again and keep pulling, and then they keep dragging it down. That's how they manipulate it down.
Jesus.
Yeah, that's how they do it. Right. Because the system is always going to try and come down there to pick up the big buyers, right? Big buyers are what move the market. So once it sees that big order, it's going to say, hey, I need to come down there and pick those shares up. And then that's how they move it all the way. That's why a lot of times when you look at a penny stock that's trading, right, and a lot of shorts in there, like if you're taking a look at like AMC or something when they were moving, right, you know, let's say AMC is at 20, right? When you look at the level 2 or montage, you see a big buyer with 5 million shares sitting at 18, right? $2 down below, right? That's a lot of shorts putting their covers down there to trick the system to come down, telling the market makers, hey, I need to go pick this order up at 18. And that's how you see you get those huge pulls from 20 down to like 19 instantly in one candle, right? And then what shorts do is they have a huge short position, they hit the market order, right? So the limit orders, you add liquidity to the market when you put in a limit order. You're adding liquidity to the market. But when you hit a market order, you are literally sending that order in right away and say, hey, fill my order whatever price you can right now. So if it's 1 million shares, they're going to sell that 1 million shares as soon as it comes in. And that's how you you start getting these huge pulls in the market. Stock starts to drop really fast, like a stock like AMC or GME, because they're dumping 1 million shares literally right there in the market. So the system didn't see the order in there to eventually fill it over time, like a limit order, right? It's not gradually filling it. There's just 1 million shares is dumping, say, hey, fill me whatever price, and they fill it, and then it dumps because there's 1 million shares being dumped right there, right, and then.
But so on the other side, if it's a limit, 5 million shares on the limit, and the machine saying, hey, I gotta get down there, I gotta get down there. What I'm trying to get at is how do you kind of trick the machine to say no? Look at the 5 million up at $2 higher. What would the machine do?
That's the thing. How you mean higher? If it's at higher?
No, like let's say somebody is like, okay, so we know there's manipulation because they're manipulating the algos, all right?
Mm-hmm.
So these guys who's shorting, all right? Let's say they have their target, let's say is 50 cents.
Mm-hmm.
But they put a huge fake order in $1 below, right?
Yeah.
So by the time it gets to like 50 cents, they cover. And then they remove that ghost bit, basically, right?
Right, pretty much. Yeah.
So what I'm
Yeah.
asking,
Mm-hmm.
to combat that, how about if someone were to say, okay, there's a guy who's putting a 5 million shares at the bottom. I want to put 5 million shares or 6 million shares at the top.
Mm-hmm.
You know,
Well, yeah.
what
So
would the machine do?
if you put 6 million shares, a buy order at 6 million shares at the top, right? Your broker, depending on what broker you have, they're likely going to fill you at market. So let's say AMC is selling at 20. You put
No,
a limit.
limits.
Right.
You put a limit. I'm gonna buy my limit is at the top. It's gonna be like if the price is now 150, I'm gonna say I want to buy it at $3.
Huh? Wait.
Is that possible?
No. So okay. So whenever I'm confused. So let's just go back to AMC. So let's say AMC is selling at $20 a share.
Okay.
Right.
$20 a share is market price right now.
Right. $20 a share is market price. And you see a big order sitting at 18. So let's say for 2 million shares, right?
Yeah.
That big order is 9 times out of 10 is a short that took position like maybe around 1990 on AMC. He's down maybe 10 cents a share. So he puts his cover limit, because when you enter a short position, you can put your limit cover all the way down. It doesn't matter. You can put it at $5 a share. right? It's not going to fill your order. But let's say you want to buy 1 million shares of AMC at 21. You put a limit order in to buy 1 million shares at 21. Pretty much every broker out there is going to fill you at market right away at 20.
Oh, okay, I got you.
You see what I'm saying?
Yeah,
They're
you
not going
can't
to
trick
fill,
it.
right.
You can't trick it up. You can only trick it down, right?
You can only trick it down. Exactly.
Okay,
And that's
gotcha.
how the market, yeah. That's how they can manipulate these penny stocks. That's how they prevent penny stocks that have no good fundamentals from keep going higher. So the system is in favor of the shorts to bring it down, because otherwise you would have too many stocks that are just garbage, that are just not worth anything going high, and that's not good for the market.
Okay. Thanks for that. I was always wondering, how if they can only work it down, why isn't there like a method to work it up, right?
Yep, exactly. Yeah.
The real method to work it up is just keep buying, right?
Yeah, the only way they could work it up is if they keep buying the ask at 20, then 20,
Yeah.
01, 02, 03, and it like that. That's the only way. But you can't put a big order in at 21 for 1 million shares to pop it up $1 per share.
Right.
Yeah, they would have to buy it at 20. They could buy 1 million shares at 20, right? And then
Right.
it could push up. But that is kind of risky, because if you buy 1 million shares at 20, and you depending on the market makers, they could pull that thing 50 cents on you right away, and you're down 500,000. So that's where you're not going to see
Right.
big buyers buying anything like that at the ask prices.
Hmm.
Yeah.
Another
So-
thing I wanted to ask about, I know I might be sounding a little bit silly, but I'm going to ask it anyway.
Mhm.
Shares availabilities, right? Availability.
Mhm.
So let's say there's a company with 1 million shares available.
Yeah.
Would a guy like Buffett or anybody else decide, you know what, I want this thing to go up, so I'm going to buy it all?
No, you can't buy it all, because if he buys all the shares, then
You're a
he's
director.
yeah. So if let's say the float on a stock, and let's go back to AMC for example. Let's just say AMC's
Yeah.
float 1 million, right? For example.
Right.
Buffett comes in and say, I want to buy all 1 million shares, right? When he
Mhm.
buys that 1 million shares, who is he going to sell it to?
Whoever wants it.
Exactly. But so when he does that, right? When he sells it, that's literally going to drop the stock all the way back down. So for him to get out of his position, he's not going to be able to make any money. Because you understand what I'm saying? Because he has all the shares, right?
Okay.
Yeah, so if he has all the shares of a certain stock, right? He puts in an order in. How do you know that people out there are going to pay the price for that stock?
Well, there's supply and demand. I am the supplier. If there's a demand for it, people want it, I'm going to sell it higher.
Yeah, but it doesn't work like that, because you can't hold the whole float of a stock, because once you start to sell out, right, it's just no way. I don't know, but it's just no way it's designed like that where you can buy the whole float of a stock.
I think that's only been done once.
Yeah.
It was that
There was-
AXE or whatever.
Uh-huh.
And the guy didn't file the right paperwork with the SEC, and he got in a lot of trouble for it.
Okay.
But he bought the entire float. The only way that you make money on that is if FOMO happens. People
Yeah.
see somebody bought a ton.
Yeah.
Exactly. And then they say, well, I want to dig in, but by that time, I'm saying I will only sell for like X dollars, because he's going to sell it higher, right? He's going to sell the price up, right?
Yeah. But it would be a huge gamble, because then shorters, they see a guy that buys the entire float, and shorters are going to pile in on it, because
Right.
they know
There'd
if
be
they
no-
go
there'd be no
short,
float available.
huh?
There'd be no shares available. I got them all.
But if people bought those shares before he bought all the entire float,
Yeah.
then you have a situation where, it starts to trickle down. And then whenever he would start dumping those shares, then you have a panic sell situation. And so
Yeah.
it's just a
but
risky thing. That's a huge gamble.
Yeah, it's a
not
huge
only-
game.
That's what I'm saying, man. So you're in all these scenarios. I mean, it may sound a little bit crazy, a little bit wild, but it's if I don't understand all these basics, wild plays that that won't happen, but in these times, you never know what can happen.
The system is they're trying to develop the system so another GameStop, AMC, and those type of things won't ever happen again. They were trying to close down all the chat rooms. I can't remember which chat room it was, but they came down really hard. I think he had to pay like $3 million or something like that, a fine to the SEC.
Mario Trader.
Yes. Yep.
Yeah.
And so they were the SEC is doing whatever they can to make sure another GameStop situation doesn't ever happen again.
So why did they hit on Mario Trader then instead of like Wall Street Bets or something?
Well, they couldn't go after Wall Street Bets because I think there was no identity to that chat room, like no single owner. It was just a whole bunch of people that decided we're going to do this. And it started a firestorm. So, but yeah, I mean, it can happen again, but because of, how many basically market makers were destroyed during that, the SEC is going to do whatever it takes to make sure GameStop never happens again.
Yeah, pretty much. Yep. That won't happen again, man.
Which is why the penny market went to trash after GameStop. I mean,
Yeah.
It has never been the same. Used to, I could make a lot of money in the penny market. Now it's a chop fest. So
Yep, they're either ripping shorts
Yep.
long, wiping everybody out, and then same thing with longs. They already wiped out pretty much all the longs that were in positions. During that time, right? Because if you take a look at all the penny stocks, they got completely hammered.
mhm.
Now you have some shorts that probably in some penny stocks now, and they're just going crazy, like SHPH, for example, HKD. Because if you take a look at HKD, right, went up to 2,500, and I'll pull it up here real quick, right? So I saw HKD, and it got up to 2,500, and I saw it here. What day was it? Over here at 40, right around here. I saw it in this area. Actually, I've done a little bit more down here in the 40s, and I was like, oh man, it's probably a good short right now. Nobody's gonna come in and buy this thing back up. So what I'm thinking they did, it sold off. Then you had some shorts that came in here thinking, okay, it's at $40 a share. It's still gonna go down to $5 or so because it's going down there eventually. We all know they do.
Mhm.
And you probably had a lot of shorts that come in here in this area here, say I'm gonna short this thing, and then look what happens again.
Yep.
Right? And it just went crazy again. And kind of the same thing here. They
Now,
probably
how does that happen though? How does that happen?
HKD, I think, started going wild because the spread was like $1, and people just started jumping in with the no fear mentality, and I mean, it just made that stock go wild. So
yeah.
there was no news behind it. What was there?
What was that?
There was no news behind that big old pump.
No news at all.
Yeah.
I was looking at it, man, and the orders were literally one share each. They were pushing
Yeah.
this thing up with just one share. Because, if you think of this is how the brokers are going to work. Let's say you have $1 million in your account, you're short HKD. Let's say 10,000 shares here at 60. Let's just say you're 60, you're 10,000 shares short 60. It goes up to 100, right? You're down what now? $40 a share, right? So you're down about 400,000, your $1 million account, right? If you get to 20, if I remember correctly, within 20% of your $1 million account, your broker is automatically gonna cut your loss.
Yep.
So even though it can go up to where you're not losing your $1 million in your account to it, right? Your broker is gonna cut you out of your position. It's just how the system is designed. So even though you could have averaged up here and walk away with a win overall, if you bought another 10,000 shares up here, let's just say, now you have a good average of like around 200. But because it came all the way up here and you came within that 20% equity, margin equity, your broker automatically sells your position and you lost all your money pretty much,
Mhm.
right? You have no choice. It's just going to
Yeah.
cut position.
Yep.
So, you know, they're just wiping people back and forth, man. It's just wiping out people. It's crazy. They're taking out as many retailers as they can. That's what it is.
Yep. Yeah, I kind of predicted that whenever the COVID happened, GameStop happened, and I remember telling a bunch of people in the penny markets that, you know, Wall Street Bets was bragging that they've beat the system, and
Mhm.
I was like, just wait. I was like, the hell's going to be paid for all this, and that's what they've done is they've jacked with spreads, they've jacked with the penny market so much that now you don't even, I mean, it's like me, I've been trading all these years and I don't even want to trade the penny market anymore. So
Yeah.
it's
Yeah.
not
It's,
desirable.
it's just like I was looking at this stock. My son doesn't want his hair brushed. Anyways, I was looking at, you know, CMRA, this stock, and the algorithm that's on this one it's just insanely manipulated, man. It's like shorts can't pull it. You know, normally back in the day, if you had, let's take a look at CMRA here. I'm on the time frame I am. Is it CMRA? No, not CMRA. IMRA. Right. So I was looking at this one, and you know, normally back in the day, you had $1 million, $2 million red candle at a stock that's trading like, let's say, maybe let's see here, what was the size of this candle here? But you've seen it in the past, Josh. Like, you know, you're trading a penny stock and you see $1 million, $2 million red candle right there and then, you know,
Yeah.
at a stock that's selling at $2 a share. That thing would normally, or $2.50, would normally drop down to like $2, right? 50 cents, just
Yeah.
instant flush. Now, bro, they're like 10 cents.
Yeah.
Nothing more than 10 cents. So it's
Yeah.
like, I don't know what kind of algorithm they have on it right now. It's just buying everything up and it just can't pull it.
Yep. Yeah, it's
So,
made it very hard. Used to, you know, I'd go in with these big 5K hits on the
Yeah.
penny stocks and you could jump the stock 20, 30 cents
mhm.
off of a 5K hit. And now, you know, it'll jump up 10, 15 cents max, and then it
That's it.
rips right back down.
Yep. I've noticed that too. Yeah, it's like I was short and I was like, you know, I'm seeing big short trying to pull this thing. And it's only going down 7, 8, 10 cents at max. And I'm like, wow. And then it comes right back up to my entry. I'm like, okay, I don't know what, yeah, whatever they're doing right now, it's just crazy.
Yeah. Did you already discuss like how to read the tape and stuff?
I have to record it, but I went into it a little bit. I'm gonna have to record. I won't do SPY. I'll do a penny stock because it's gonna be a lot slower.
Yeah.
The SPY is just lightning quick. There's no way we could watch it at full speed until we have to slow it down and break it down. It's just it's fast.
Yeah.
Yeah. But we'll do that. We'll do that next week.
Okay.
Maybe I would say Monday evening. I'll do a SPY Monday evening.
Sounds good.
Yeah, but I gotta run now. So that way, when I upload this video to YouTube, it's not too long for the people that didn't get on today because we're already in for an hour.
Just edit it, man. Just only send up the portion because you're editing all since all you broke off and came back and all the stupid questions I had to find ask.